Hello, everybody. Dr. Richard Smith here. Today is Tuesday, November 12th, 2024, and we are the Foundation for the Study of Cycles, a not-for-profit 501c3, bringing you tons of great content for free here on our YouTube channel. Appreciate your support. And wow, what a week. So I've titled today's talk, Trump Time. Because of course, here at the Foundation for the Study of Cycles, we study time. And we are in Trump time. And there are some people in the world who seem like they can bend events, bend time even in their direction. And I think Trump has bought us some time, bought the economy some time. You know, we've been following a lot of cycle tops for a while now, nervously through 2024. But consistently for the past couple of years saying, at a minimum, the weekly 180-week, 41-month cycle that Edward Dewey documented and has been tracking since 1875 has had the cycle winds at our back. And we are topping right now in equity markets in that cycle, but we know that they can have right extension. A 180-week cycle can have 10%, 20% extension easily, even all the way up to 50% of the cycle length. So a quarter of a cycle, 180 weeks. What is that? 45 weeks? That's almost a year. That cycle could top for a year. And I personally think that Trump is going to be the most pro-business president I've seen in my adult life. And I think he's going to be going for it. So for a while now, we've also talked with our friends over at Property Share Economics about the 18.6-year real estate cycle. We're going to revisit that here briefly, but that has been, we've been talking about that for a couple of years now, as peaking in 2026, right? So I wasn't clear what could be the catalyst for extending, a risk-on environment, speculative environment for another leg up. But I think we have the answer to that now. Again, look, I'm going to be watching things closely. I'm telling you how I'm reading the tea leaves as they're laid out at the moment. Things could change. But when I look at everything right now, I think it's risk on for a while longer. I was even uncomfortable with the seasonal trade of the year right now, right? We've talked about that starting at the end of October, going through the beginning of January. It's the most bullish time of the year. Trends are up. Not seeing a lot of divergences. And now we have an uber bullish president that really wants the stock market to go up, that's pro crypto. And animal spirits. Here we go. So with that as a little bit of backdrop, just want to kind of look at the big picture today. As I see it now, okay, this is trading market cycles. So it is a time that we have to be vigilant. We have to be keeping an eye on things. There's going to be bumps along the road. My best guess at the moment is that we've got more upside ahead of us. So let's take a look. Excuse me. No, that's not what I wanted. Okay, here we are. Come on. Okay. There we go. So this is a chart shared by Akhil Patel. There is a presentation on our YouTube channel. If you look up 18.6 year cycle, Akhil, A-K-H-I-L, Patel, who put out a book last year. And this is showing, you are here. This was like 2022, 23, but this is the 18, 19 year cycle in real estate, having last bottomed here in 2011 and 2012, right? 7 years up, a correction into 1920. And whoops. Another 7 years up out of here, including this era of very easy money. And at the top, the world's tallest building announced, which we haven't seen that yet. And then usually down here, the world tallest building is finally built and completed with no occupants until the next cycle kicks off. So great work by our friends at Property Share Economics. Phil Anderson started this work, and Akhil Patel is working with Phil Anderson now and contributing a lot on his own. And so we thank them again for sharing these insights with us. So you can see, right now we are about right here. Okay, if we go 23, 24, end of 24, this is 25 and 26 right here. Could we rally for 2 more years? I don't know. It makes me nervous. The debt makes me nervous. But just because we're at highs doesn't mean things can't go higher. Look, I'm fully aware of the cycles that are peaking right now, and I am going to be attentive to them. Don't get me wrong. This is not like clear skies, blue waters, smooth sailing time. But on the whole, I kind of think we're here. I hate to say it, but I think that's where we're at. This is a little chart that we put together today showing the average daily return by election phase. So 0 here is actually the end of 24, okay? November and December, after the election's over, the 2 months before the new president gets inaugurated. So these 2 months are the most bullish time in a presidential cycle, going back to 1950, okay? About 0.07% per day on average, the most bullish. The rest of these year 3, these are full 12-month periods, and the average return, daily return. Okay, so year 1 is bullish, year 2 is the least bullish, year 3 is the most bullish, year 4, middle of the road. But these 2 months right now in a new presidential term are usually bullish. And of course, we've got the seasonality, the most bullish time of the year right now. This is just showing the same idea, but cumulative return. Okay, so not 300% per year, 300% overall year 3s cumulatively back to 1950 in the presidential cycle. So year 3 is clearly where most of the gains are made, but some decent gains in the next 2 months. This is the current yield curve of 10-year minus 3 months, we can see that we haven't uninverted yet, right? The 3-month T-bills are still paying more than the 10 years. And typically, when we uninvert, we get a recession in the next 12 months. So I think this also says, recession is not happening next week. Could be another year. Could be 18 months. With that as backdrop, this is everything that I track. We've looked at this before. I've got my trends here, the T's, okay? 15 minutes, 30, hour, 2 hour, 4 hour, daily, weekly. My cycles, 15, 30, 1 hour, 2 hour, 4 hour, daily, weekly. Seasonality, commitment of traders, daily sentiment index. We know broadly, we've been talking about this for a while, that these weekly cycles here are topping. This first cluster here are equities. Okay, EMini, S&P, NASDAQ, Dow, and Russell. Weekly cycles have been topping, are topping, right? We're at the tops. Again, a quarter of the cycle can still give some right translation, which in this 180-month week cycle is like 45 weeks. The daily cycles are definitely got some headwinds now too. So I think it's a time to be cautious, but especially, after we just had a huge run up. Bonds, similar. Now bonds, I think part of the Trump trade is bonds coming under pressure, right? The cycles and the trends show bonds being under pressure. Right now, markets still think Trump could raise the deficit, lower taxes, right? Increase the debt. So bonds are not bullish right now. Metals got some bullishness trend-wise and on the short-term cycles right now. I'm not totally sure about metals in a Trump world. Kind of think it's not going to be uber bearish, but jury's out on that one. Bitcoin and Ethereum, I've been saying for a while now that I thought the next leg up was on the move, and boy, howdy. We'll review the Ethereum trade in a few minutes here from last week, but that was unbelievable. Gasoline and energy looking pretty bullish. Gasoline particularly is always bullish, November, December-ish. And I think the dollar, it's had a huge run over the past couple of months, as we've predicted. We'll see, but probably a stronger dollar. It's been a good week to be short the euro and the yen. So that's the big picture. Let's jump over now. Look at some charts. So here's the Ethereum trade that we looked at last week. We had the buy signal here with the 3 cycles all bottoming and the cyclic RSI turning up. In 1 week, we went from 2450 when we talked about this trade last week up to 3400. What is that? 1,000-point move out of 2,400. That's like a 40% move in 1 week. Are you kidding me? With almost no downside, right? I mean, this was election night right here. It was Tuesday when we talked about this trade last week. Lars and I are doing a crypto workshop this week. By the way, I'm going to be covering some of this short-term stuff. So if you're not signed up for the crypto workshop, I really encourage you to join it. But this was an amazing signal, supported by the trends, supported by some higher term cycles, and supported by what the markets were hinting at already. The markets did a great job, didn't they, of forecasting the election outcome? I'm impressed. I'm impressed. And boy, that was just an explosion, 40% in a week. Good for Ethereum. And by the way, I don't know if this has been announced yet, but I think Ethereum's going to get some support in this presidential administration. So I'm pretty bullish on Bitcoin and Ethereum for the next little bit, at least. Obviously, this is quite a stretch. Wouldn't be surprised to see a pullback here. But wow, what a trade. All right. So let me just stop here for a minute. So I've covered a lot already. We haven't gone into specific trades. We can look at markets closely, but let me just see what's on your mind. Arlo, why is it Trump time even though he is not in office yet? I mean, he basically is in office. Markets are anticipatory, right? They're anticipating the future. They're anticipating a Trump administration. They were anticipating it before he even got elected. I mean, I think he's been in office for a month already so far as markets are concerned. And we see, you know, in that little chart that we put together that the first 2 months of anticipating the next president, you know, is usually a bullish time. So, Brett, thanks for sharing. Been watching and following for about a year. Just signed up now to become a member. Thank you, Brett. Love it. What does the minus mean in the green and red squares on symbols versus time frame? Minus means it's the bottom of a cycle and likely to be turning up. And you know, usually you see a minus 95 and it should be green, I think. Let me double check my own work here because sometimes I forget. Yeah, so a minus 95 or a minus 100 is a cycle bottoming, and 100 is the peak of the cycle. 95 is almost there. Okay. If we do see the 18.6-year property cycle appear to play out, it's going to be incredibly hard to sell when the euphoria sets in. Isn't it easy to sell when the euphoria sets in? Maybe when the euphoria evaporates. Usually it's when the euphoria sets in is when, you know, it's easy to sell. So I'm not sure what you're getting at there. Winisks. Have you thought about trading the altcoins that are correlated with ETH and are essentially leveraged on ETH? I am thinking about it. I haven't gone into the altcoins very much myself yet. So, you know, I'm not a Bitcoin maximalist, but Bitcoin has been my main engagement in the crypto world. I'm not invested in a bunch of altcoins. I don't track the crypto world. But I do think that altcoins leveraged to Ethereum, probably have a good shot. And I'm interested in learning about it more. Leveraged plays on ETH would be something like Chainlink. Okay, so back to some charts. Right now, the best trade I've got for you is in gasoline. I know it doesn't sound very sexy. Not like Ethereum going up 40% in a week. But there is an annual cycle in gasoline. Okay, here we are in the daily data on gasoline futures. And we see this 259-day cycle. We're at the bottom of the cycle. This is like minus 95. And we've got the cyclic RSI turned up with a buy signal coming inside the bands. You can look at it on the weekly data too. This is the weekly data. And the number one cycle right here is a 52-week cycle. Okay. So the bottom is like right now, November, early December 23, December 22, December 21. See a pattern here? So this is probably, out of all the cycles I've looked at, the most consistent cycle, maybe, than the 180 week cycle or 41 month cycle. But this is an incredibly consistent cycle, whether you look at it on the weeklies or the dailies. It's not as obvious in the ETF of UGA, the gasoline ETF, which is an option. But I did want to revisit this and bring it to our attention, because each week I try to bring us the best trade that I can see. And we've got this. We're entering into the buy season for gasoline. Okay. And then we've got this. Okay, let me just fix this up here. Where'd they go? Okay, so there's this one, the 180. Yep, and this 250. And this 90, I think, was the other main one. Sorry, let me go back and just do this one more time. Okay, I think it was gasoline. So trade of the week here, gasoline, supported by the higher term timeframes. Energy looking a little bullish at the moment, and a buy signal on the hourly data. Okay, with a cyclic RSI, buy signal on the 60-minute data. Interesting opportunity, one I'm interested in just as for trading this week, okay, as a short-term trade of the week. So not much more to say about that other than keep an eye on gasoline heading into mid-November and through, the middle of next year. It's just one of the strongest cycles I know of. And, we're getting some support on the shorter time frames now on gasoline too. So that's the big picture of why I think that it's a risk-on environment, that the 18.6-year cycle overall, the next leg up in that has started to poke its head up above the ground. And I think a lot of the Trump trades and Trump trends are likely to continue for the foreseeable future with some volatility, no doubt about it. So if there are things that you want to look at in particular, okay, let me know. Go back and take a look at the questions here again. Anybody got anything that they would like me to look at in particular? I'll be waiting for your questions. Take a few more minutes. Let me see here. Where'd we go? Let's start just looking at the EMini. Okay, we'll start with the daily data. This is the 4-hour data right now on equities, obviously. Good buy signal here from the cyclic RSI. Clear cycle here, the 215. Okay. I mean, hard to see how you soar from here, but I think we could. The cycle certainly got some life left in it on the 4-hour cycle. We've known for a while that the 80-day cycle is topping, but even a quarter of this cycle, if we continue further, takes us out a couple more weeks. And again, you know, the shorter term cycles, the 4-hour cycle, still on the bullish side. Meanwhile, momentum has gone way up. And if we look at the 1-hour cycles, not super, nothing super clear here. Yeah. Let's try the 2-hour cycles a little better, you know, especially with this 121 and 240. Topping. Momentum down. Okay. Like if you've been long from here to here, you definitely want to take some profits. If not, step aside, wait and see what happens with the next correction. You know, I think that's kind of the story in equities. If we take a look at Bitcoin, so Bitcoin from 67.5 up to 90,000. So that's 25,000. Again, like a 30% move in Bitcoin, not the 40% move of Ethereum, but heck of a move. You know, after a move like that in 1 week, you got to expect some pullback. And I think we're starting to see that here. You can see it in the hourly data. The 4-hour data. Nothing really jumping out at me as a perfect cycle, but definitely some caution here. Of course, the daily data. Been tracking this one for a while. And then we know the weekly data is a little less encouraging. But my sense is that it's hard to be bearish right now. I hope I've made that clear. Another interesting setup that I was looking at this week is in silver. Let me just show that to you too. So got a nice clear cycle here on the hourly data in silver with a buy signal here. Okay, doesn't get any clearer than that. Can look at maybe, 136, so 81, maybe. 58. Yeah. Well, got a really clear cycle here in silver. And if we go back and look at silver, a lot of cycles, 15-minute, hourly, 2-hour, 4-hour, all with bottoming persistent cycles. All right, gang. Well, that's what I got for you. Let's see. Cycles for the Russell. Sure, we could take a look at that. S&P, SPY will fill 590 and 576 gap. Now stay short or short all rallies. Okay. GPB USD. Maybe next week. I'm not sure. I haven't really studied that one too much. So, look. We're in the seasonally most bullish time of the year. We've got a bullish administration. We're in a bullish part of the presidential cycle in terms of equities, okay, along with crypto, Bitcoin, Tesla. Anybody see the move in Tesla? Elon, I think Tesla went up from 240 to 350. I don't think these moves are going to collapse overnight. These are huge impulse moves. I fully expect pullbacks, but I just don't think the end is nigh. Meanwhile, many people have been calling for the end right about now. Okay, I get it. It's going to have to prove it to me. And so far, what's being proven is the bullish case for equities, for crypto, bearish case for bonds, bullish case for the dollar. And this week, we've got some bullish trades in gasoline and silver in particular. So that's what I've got for you. And be back again next week. Thanks so much, everybody. Appreciate your support. This is Dr. Richard Smith, and we are the foundation for the study of cycles. So bring a friend next time. And if you haven't signed up for the crypto course, we'd love to have you along for that educational experience. Thanks, everybody. Have a great week. Be careful out there. Bye-bye.